What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today we're going to do macro level technical analysis, and I'm going to explain to you why the stock market is still bullish. So first up, let's take a look at the S&P 500 SPX index. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up we are looking at the SPX weekly chart. So every candlestick does represent one entire week's worth of price action. So the first thing you can notice is that we did have a very volatile week, and at one point we did see SPX trading down there around 42.80. The good news for the bulls is that the price action did close back above our 20 simple moving average. And remember, this is a weekly chart, so this is a more of a macro level view. We don't really care about the intraday volatility of the days of the week. We only care where the candlestick closes at the end of the day on Friday. So from this candlestick, you can see that we did close higher than the previous 2 weeks, and we are still above a positively sloping 20 simple moving average, and we still do have the macro level bull trend defined by the 5 EMA above the 13 EMA and the 13 EMA above the 20 simple moving average. So we still do have a macro level bull trend with price action still above our most critical support level, which is our positively sloping 20 simple moving average. So remember, we've been talking about this for quite a long time, and we did nickname the month of September, September. And if you remember, I did make that video called Stock Market Correction 2021, which showed you that critical resistance trend line that actually did trigger this pullback. So when you start getting a pullback, there's always a possibility it's going deeper into a stock market correction, but you always have to follow the price action and be objective. And right now, the price action is telling us that this could have just been a pullback, and we're going back on the bull, going to another brand new all-time high. I say that because there was plenty of opportunities for the bears to close this candlestick below our 20 simple moving average, but the buyers of the dip are still out there, and you cannot ignore that price action. When you see the dip being bought up and you see bullish price action closes on a macro level scale, that's not something you want to ignore. Remember, if the stock market is going to roll over and die, we will see the price action closing below this critical support, and then we can adjust accordingly. Strong bull markets do not die easily, and this is still a very strong bull market. So remember, we have that price target up there at 45.35, and that level did trigger this pullback, but we still do have price targets that could take us even higher at 46.05 and 46.76. So if the bulls are still out there, which it looks like they are, we should see the price action start impulsing higher as early as next week, and we will eventually blast through this previous all-time high and start making brand new all-time highs. Now, if the pullback is not over and we're going into a deeper stock market correction, we should see a weekly candle closing below 4,300, and we will start back down towards this support level at 41.55. As you can tell, our Bollinger Bands are starting to squeeze, so our 50 EMA is outside the lower Bollinger Band, so it's not going to be like we just flush down straight to the 50 EMA, which is down there at 40.80. It's important to not ignore the Bollinger Bands, because as you can tell, the volatility is drying up in the market as we get into this critical support level. Even our support level at 41.55 is currently outside the lower Bollinger Band. So the price action and the trend are still looking very bullish, and there's not a whole lot of technical indicators that tell us that we're going to flush down to the low 4100s. So don't ignore the technical analysis. I can't tell you time and time again how important it is to remain objective, and right now the technical analysis is telling you this is still a bull market, and this was just a pullback in the grand scheme of a larger secular bull market. So right now, my stance on the SPX is as long as we're above 4,300, the stock market is still bullish, and you still do want to be very bullish at these levels. If you're looking at risk reward, this is one of the best risk rewards you're going to get. If you're too scared to buy now, you're eventually going to FOMO into the market at a much higher price. If you set your risk level at our 20 simple moving average, which is right around 43.73, you have a very small loss if you're wrong, but you have the potential of a huge gain if we start running into the 4600s. If you wait until we bounce significantly higher off this level, your risk is only increasing as you FOMO into the market near the top. So I can't stress it enough, this market is still bullish with price action and trend, and there's nothing on this chart that tells us to expect a lot more downside. If you're staying objective and you're looking at the price action and the trend, they're both still bullish on this macro level view. Now, switching this over to a monthly chart, you can see that we did have a very bearish looking September, but we did close right on top of the 5 EMA, and we are starting to see a positive bounce in the first couple of weeks of October. So the month of October is shaping up to be a very bullish month, which could take out the previous all-time highs, or at least start us back on that journey towards that level. We still have the full bull trend on the monthly chart, and we still have price action and trend that are extremely bullish. So nothing on the macro level chart on the weekly or monthly chart is telling us this bull market is rolling over and dying at this time. Jumping over to the bear bull survey, we can see that we only have 25.5% of the people that are bullish. And remember, this is a contrarian indication. You never want to be bullish when everybody and their mother is bullish because you want to sell when everybody is greedy. Typically speaking, you want to get bullish when everybody is fearful and everybody is panic selling and there is a ton of cash on the sidelines. So looking at our bear bull survey, which side of the market do you think is going to do the best? We only have 25% bulls, but we're over 37% of the people that are neutral and over 36% of the people are bearish. Remember, if people are bearish, they're more than likely trying to short the market. And if people are neutral, they're more than likely just sitting in cash waiting to see which direction the market's going to go. So the bear bull survey agrees with the technical analysis that we are going higher and that we did find critical support. We have a lot of people in cash that are eventually going to buy back in when they realize the market's going back on the bull. And there's a lot of people that are shorting that are going to get short squeezed when we start blasting through upper resistance. So the bear bull survey is telling you to be bullish at this time. And right now, that does match with the technical analysis. Jumping over to the NASDAQ 100 NDX index, again, we're looking at a weekly chart, and we could again see a very similar story with the NDX. Price action closed right above a positive sloping 20 simple moving average right there at 14,830, and we still do have the full bull trend on this weekly chart. You can see the Bollinger Bands are starting to squeeze, and our lower Bollinger Band is starting to aggressively slope upward, going back above our 50 EMA on the weekly chart. So as the Bollinger Bands squeeze and we find critical support and we maintain the bull trend, we can also see the NDX has a very nice looking wave pattern. We went up in a wave, we pulled back in a wave, and now we're going back up in a wave and pulling back down in another wave, which does look like we do have that one more wave higher, which should take us to our price target up there right around 16,000 on the NDX. If you know anything about wave structure and Elliott wave, you can see how beautiful and textbook this pattern looks, and this is a very technically bullish pattern. Remember, when you get pullbacks, that's a buying opportunity, and we're currently sitting right on top of the most critical support, which is our weekly 20 simple moving average. You saw the same exact story on the SPX, so if the SPX and the NDX are both looking bullish, that increases the probability the whole entire stock market is going to be bullish as a whole. Remember, we're looking for macro level analysis where the analysis aligns with our thesis, and we don't just want to see a bull market in one pocket of the stock market. We want to see bull markets across the board, and currently that's what it's starting to look like with the SPX and the NDX both looking bullish at this time. So we did have a previous pullback where we came back down to our 20 simple moving average, and you can see how strong the bull rally was coming off of that support. Right now, we see the same exact thing coming back down to our 20 simple moving average with that support holding up. So don't sleep on the fact that we could be going back into another very strong bull cycle coming off of this strong support. Just like I told you with the SPX, this is a great risk reward setup because you're taking risk right on top of critical support. If you're wrong and you take a small loss. But if you're right, you have a huge gain and you have a very critical risk level that you're taking right on top of support. So as far as risk and reward goes, the bulls do have the advantage. So that's why I'm expecting to see such a strong bull rally going into next week. Right now is the time for the bulls to jump back into the market hand over fist. And if they're wrong, they're going to take a small loss, lick their wounds, and go home and get ready for the next critical support. If they're right, we're going back into a bull cycle and there's huge upside gains, and the bulls are going to take on that risk. If you're a bull and you're looking at this chart, you'd be absolutely crazy to ignore it. And don't just think that I'm the only person that can look at this chart and see this is a great risk reward setup. There's going to be a lot of buying pressure going into next week, and this is exactly why I'm trying to explain this is the opportunity you don't want to pass up. If you disagree with me, that's fine, because the facts are going to be there next week and we're going to see who was right based on the technical analysis. Jumping over to the Dow Jones, again, we see a very similar story, but we don't have quite the same bullish trend in the Dow Jones. The good news for the Dow Jones is that we did test that weekly support trend line and we did get a very strong bounce off of that level. The price action is below the 20 simple moving average and we no longer have the full bull trend on the Dow Jones. And looking at the Dow Jones, we can see the Bollinger Bands have been squeezing for quite a while now, going all the way back to August. So with the Dow Jones Bollinger Bands already squeezing, there could be a big move coming. And as you can tell from last week's price action, we did get a relatively bullish looking candle. Ideally, we'd like to see the price action back above our weekly 20 simple moving average, and we would like to regain that full bull trend as the Dow Jones gets this Bollinger Band squeeze to fire to see if it's going to fire to the up direction or the down direction. So on the Dow Jones, if we take out this support trend line right around 34,000, that will be a bearish indication we're breaking down and possibly coming back down to the weekly 50 EMA. However, if we see the bulls taking back over and we regain the bull trend on this macro scale chart, that will be a very bullish price action breakout, and we could see the Dow Jones attempting to break out and start running to brand new all-time highs. So the Dow Jones is still looking relatively neutral with no strong trend for the bears or the bulls, but that will change very soon, and we're going to see which direction the Dow Jones is going to break. So look for a breakout above 35,000 on the Dow Jones, which would be bullish, or a breakdown below 34,000, which would be bearish. On the Russell 2000 weekly chart, we see a very similar story of consolidation and sideways price action going absolutely nowhere. There's no trend for the bears or the bulls, and the price action's just hanging around that 20 simple moving average. We see the Russell 2000 is holding up above the support trend line, which is right there, right around 2190, and we really need to see the Russell 2000 breaking down below about 2160 to see the bears take over. We still have strong support around the 50 EMA right around 2120. Now, if the Russell 2000 can start breaking out above 2300 and regain the full bull trend, we will see this Bollinger Band squeeze fired to the upside, and we could see the Russell 2000 go for that next leg higher. Remember, the Russell 2000 has gone absolutely nowhere for many months now, so when we finally do get a bullish breakout, it will be extremely bullish, and if we do get a bearish breakdown, it will be extremely bearish. You don't consolidate this long for no reason, so look for that next breakout move to be a monster rally. Whether it be bearish or bullish, just watch for the resistance breakout for bullish or the support breakdown for bearish. But right now, if the rest of the stock market is staying on the bull, there's no reason to believe the Russell 2000 is not going bullish at this time. Jumping over to the VIX weekly chart, we can see that we did participate in VIX Crush Friday, and we did see the VIX getting crushed down back below 20, closing just above our support level at 18.2. So the VIX is going with our thesis that we're going back on the bull, and we are currently sitting at very strong support as we see the VIX getting crushed back down below 20. That is not a coincidence, and I've been telling you for many weeks to pay attention to the VIX, and I gave you very specific price action to watch for, and one of the bullish developments is the VIX closing back below 20 and then back below 18.2. So if we go into next week and we see the VIX closing below 18.2, that will confirm that we're bouncing off strong support and going back into another bull cycle. So right now, there's nothing on the VIX that tells us that we have to be cautious. We see the very opposite with the VIX getting crushed and getting back down to our bullish levels. The one thing I would advise you to pay attention to on the VIX is we are building this very strong rounded out base, which does tell us the VIX is finding very strong support down at these levels. And this could be a caution sign of a possible black swan event coming right around the corner. So if the VIX continues to build this strong layer of support and we can't see the VIX getting back below 18.2, that would be very worrying, and then I would think it's possible the stock market could roll over and die. So if we see the VIX closing back below 18.2 and getting back down towards 16, I don't think we need to worry about this rounded base look anymore. We need to see the VIX blasting through support and heading back down towards 14, and then this VIX weekly chart will be looking a lot more bullish. However, watch it closely because right now we do know if the VIX is below 18.2, that's a lot more bullish. But if we see the VIX turning a corner and starting to break back above 20, that would be very cautious, and that would be your very early warning sign that the stock market correction is not yet over. So you do need to protect yourself to the downside. So watch the VIX closely, and right now it is looking bullish, but you don't want to just ignore it and not look for a possible turn of events. Jumping over to the Bitcoin weekly chart, we can see Bitcoin is still looking very bullish with a very bullish weekly candle. We did break out above that daily high above 52,000, and we're seeing Bitcoin currently trading above 55,000. Remember, I have price targets on Bitcoin that could take us to brand new all-time highs this year, with the next strongest resistance level just below 59,000. So as you can tell, Bitcoin has that really nice wave structure with that pullback, and we could be going into that next cycle higher, which could take Bitcoin all the way up to about 75,000 before the end of the year. So strong resistance levels on Bitcoin are right around 59,000, 67,000, and 75,000. As long as we have this full bull trend, which we do with the price action and the trend, we have no reason to believe that Bitcoin is not going to continue to trend higher for the rest of the year. Now, Bitcoin is a great measurement of risk on sentiment, and if there's a lot of risk on in the crypto market, there's no reason to believe that the stock market is going to roll over and die and start into a deeper correction. So the risk on sentiment in Bitcoin carries over to the sentiment in the stock market, and if we still have risk on and we're bouncing off critical support, there's no reason to believe that the stock market is not also going into another bull cycle. Watch that support closely because obviously if we start losing support, that won't be the case. But coming off of strong support, still in a bull market and still seeing risk on sentiment in Bitcoin, there's no reason to believe that this bull market is just going to roll over and die easily. Your strong support levels on Bitcoin will be 51,000 and 45,000. And as long as Bitcoin is above 45,000, it is still extremely bullish. So to pull this all together, jumping back over to the S&P 500, you can see all of these indices are sitting on top of very critical support levels. So now is the best time to take on risk. When you take on risk near critical support, you have very little risk for a lot of potential reward. So hopefully you understand that concept. If you don't understand risk reward, go educate yourself because you don't want to miss out on this opportunity. There's very few times in the market where I scream it's a buy, and this is one of those times where you're sitting on top of a great risk reward setup as long as you're taking the long trade. If you're trying to short at critical support, you're on the wrong side of the trade until we break through critical support. So now is not the time to be a bear. It is time to be back on the bull until we see the price action and the trend telling us we're wrong. It's okay to be wrong in the market. It's all about taking risk and reward, and it's all about stacking the probabilities the highest side in your favor. Right now, all of the probability is stacked to the bull side in the long trade, so you want to be on the right side of the trade and you want to be in the long trade until we break through a critical support. If you're wrong, you take the loss and you move on and you learn something from it and you're comfortable with the fact that the odds were stacked in your favor and you lost anyway. It's how the game works, and if you're not willing to play the game, then you really shouldn't be trading at all. So hopefully this macro analysis explains why the stock market is still bullish, and if you're new to my channel, I do daily technical analysis looking at the market as a whole to always help you stay on the right side of the trade. I also have my own trade alert service called Bank Trade Alerts that only trades TQQQs, and I think with the current market conditions, now is a great time to be a bank member, and I am currently running a promotion code for 50% off your first month. If you're interested in joining Bank Trade Alerts, you can find out all of the details and how to join by clicking on the links in the description below. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this volatile market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Discord trading community, you could click on the link below to find out how to join. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.